When we were little, I was always so afraid I'd break this. I miss her.
Me too. What are you gonna do with the money Grandma left you?
I'm investing mine. I know she wanted each of us to have a little nest egg for the future.
Eggs. Remember how she always used to say, "Don't put all your eggs in one basket"?
Well, not putting all your eggs in one basket makes good financial sense. I'm going to spread the money around.
Why not just put it somewhere safe?
Because when you're investing for the long term, you have to take some degree of risk. Otherwise, there's no way you'll make any real money.
What's one have to do with the other?
Well, the average amount of money an investment earns over the long run is related to the riskiness of the investment. Riskier investments tend to make more money. Less risky investments tend to make less money.
Does that mean riskier investments are better?
Not necessarily. With riskier investments, there's a chance that you'll lose money, not just make more money.
So there's a trade-off between risk and return.
Yes, each asset in your portfolio, every investment you own, will have some degree of risk. But what you don't want to have happen is you have a total wipeout and you lose everything you own all at once.
You mean like if you only own stock from one company?
Exactly, because then you're betting on the performance of just one company.
And if it were to get totally destroyed by a hurricane or something, well, you're screwed.
Well, it could also be something less dramatic, but that's why it's important to invest in a mix of assets and not put all your money in one place.
What if I invest in the company I'm working for now? They're growing. I know they're doing well.
Sam, are you even listening to me? The whole point of putting your money in a bunch of different assets is that if something unexpectedly bad happens to one of them, you'll be cushioned to a certain degree. What if your company tanks? Then your job is in trouble. And if your job's in trouble, is that when you want your investments to be doing badly? I don't think so.
So that's where not putting all your eggs in one basket comes in. Don't have all your investments and job tied to the same company, and don't have all your money invested in one company. Spread it around.
Right, but there's one more piece. What if you invested in a whole bunch of companies, but they all manufactured umbrellas, and all of a sudden the value of umbrellas plummeted?
Sounds unlikely.
Maybe, but think about when the tech bubble burst, or when the real estate market crashed.
I remember that. So it's smart to invest in many different kinds of companies and investments.
Basically, you want the ups and downs of your investments to be as unrelated to each other as possible, so that if some do badly, others will offset those losses. That's why it's a good idea to spread your investments across different countries, too.
You're as smart as Grandma. The advice about not putting your eggs in one basket makes sense.
Well, look, one of Grandma's china baskets.
You get the box, I'll get the door.
Gosh.